Alright guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review the stock market, review the crude oil markets, talk about the dollar index, review some currency pairs, and also cover the bond market as well. So without any delay, let's get into it. Alright, as you guys can see, we're looking at the daily 10-minute chart, and right now the dollar index is trading right below this key trend line area. Remember, if this area is confirmed right below, chances are the dollar index will continue going lower. As you guys can see on the 1-minute chart, we are having some issues trying to get below that, but once we do, and I want 10 1-minute candlesticks continuing this downwards momentum. Anyway, let's go ahead and go back and review the Dow Jones. Not really the Dow Jones, but the S&P 500 Index E-mini June 2011 future contracts. And pretty much the June 2011s are bouncing off this trend line. And pretty much this is the pennant pattern you see on an intraday basis. Right now, I do anticipate this contract to break right above this trend line right here. So just watch that 1,330 level very closely. I do think that we will be able to break it for another point, and we could retest the 1,333 area for as long as we do break that key trend line at around 27.75. That area is very important. Once you break below that, chances are things will get a lot more hairier for the dollar index and will continue going lower. As you guys can see, we could go ahead and zoom back to the 30-minute chart and well, not really the 30-minute chart, but the hourly chart. And the hourly chart is going to be very important because we're going to look back at some past areas of support and just see what we can do. Alright, so we go back and we see that we have a key area of support at around 75.30. So we have even 30 cents more to the downside. And remember, anytime the dollar index does go lower, that does provide a good area of good buying opportunities in the stock market as well. So I do still have a positive bias on stocks. I do believe the dollar index will continue going lower as we haven't had anything major change out of the White House or the Federal Reserve. Federal Reserve keeps on pumping in free money into the economy, and free money always equates into inflation, and there's no way the dollar index could gain strength in an inflation-based policy. Or with those type of policies in place, you really couldn't. There's real no justification for the dollar index to pivot off of any support area, for that matter, at least over the longer term. So yeah, I do anticipate more downside to the dollar index, and that's going to be very good for those commodity traders and those stock traders as well. Again, we're touching the support area. If we break it, much more downside, and you know what, you guys are going to have to be able to confirm that tomorrow. And it's going to be really up to you guys to make sure that this area has been broken, because I can only do so much. My videos do come up a bit after the fact. Now let's go ahead and review the next chart, which is going to be the Euro-US dollar. Euro-US dollar did break above this area of resistance, this key area of resistance, which is basically at around 141. And we did break 141. We are continuing to go higher, and we do have a strong uptrend in play. So again, nothing wrong with the Euro-US dollar. We are going to go back to the 144 area. So just keep that area in mind. Anticipate somewhat of a resistance in that area, and just trade it accordingly, and watch out for that 144. That's only 100, give or take 180 pips away from that key area of resistance. So again, just be cautious, be patient, and anticipate more weakness out of the dollar. If you do reach the 144 area, I would consider taking off some of your profits, and just wait and see, because it will get a bit choppy up there. And remember, you don't want to be sticking around when things are choppy or if things get hairy, because traders only want to be there when easy profits are available. You don't want to stick around when things start to get hectic. You see some consolidating patterns, and of course you're not in it for that. You want to be in there for simple, easy profits, easy profit-taking opportunities. Now let's go ahead and review the crude oil markets. Crude oil markets are relatively, looks like they're having trouble holding on to the 108 area, but again, I do anticipate this uptrend to continue. At least over the short term, dollar index is most likely going to weaken. Therefore, crude oil will have much more much more push behind it just because of a weakening currency. Another thing that I do want to point out is that the rebels are able to basically ship oil that might have an impact over the midterm. It just might give investors a mentality that stability is coming back to Libya and the oil supply is going to be more consistent coming out of the Libyan government, or what we recognize as the Libyan government, which means that we don't recognize Gaddafi as the sovereign leader or whatever, but the rebels as the leader, and I guess the managers and the people in charge of the Libyan government. Now, that being said, if oil supplies and oil distribution stabilizes out of Libya, there's no logical basis to be buying into this hype anymore. Keep that in mind. Over the short term, we could go a little higher, but at this point, I really don't want to push it. I'd much rather be cautious with crude oil. Caution is in play, and I don't want to be pushing it anymore at this point. Alright? Just keep that in mind, because it is a very, very important event. Following that crude oil incident, we do have bonds. Bonds are getting a beating, as you guys can see. That's pretty much a forward indicator. Remember, guys, when bonds fall down in value, the dollar index tends to follow in that case as well. Because whenever an economy inflates, that implies that the bond rates have to go up. If you want bond rates to go up, or the interest that bonds pay go up, the value of bonds have to go down. And if the value of bonds go down, that also implies that the value of your dollar is worth less as well. When you apply all those three theories together, the whole point is that the bond market is going to be a leading indicator of inflation, and inflation means that the bond market should go down in value, therefore the dollar index should go down as well. Now, if you guys go ahead and look in the 5-day chart, you guys will notice ever since Tuesday, early Tuesday, 9 a.m. onwards, you saw the bond market have a pretty sizable sell-off. Now, if you guys look at the 9 a.m., you guys will notice you see the same exact pattern in the dollar index. That's very key and important, because if you see a sell-off in the dollar index, you should also see a major sell-off in the bond market as well, and that's exactly what happened. They started selling off their bond positions, and now the bond market is stabilizing and consolidating a bit. But remember, a break below that key area of support that I mentioned right here, you break that, and you're going to break the bond market as well. So keep that in mind. This area is pretty interesting support, but again, if it's broken, you know, gold, silver, a lot of things will go up. You'll probably see a small bounce in crude oil continue, but I wouldn't really buy into that. I pretty much think that crude oil is a done story, and you should stay away from it as supplies have been stabilized out of Libya. Now let's go ahead and review the volatility index. Now again, if you watch that chart right there earlier with the dollar index, that area of support is very important. Once it's broken, you can easily assume that the volatility index will continue going lower. That means you should be net short the volatility index, and you shouldn't be buying into the volatility index. You'd make easy money just by shorting this, because again, the volatility index only goes up when the Dow Jones goes down, and if the Dow Jones goes up, therefore the volatility index will go down. And again, volatility index thrives off of volatility, and a market that continues going higher isn't very volatile at all. So I do think that the volatility index will continue its downward trend. As you guys can go ahead and see, it's just been continuing to fall, and you know, it's not no surprise. I think that after breaking this area of support right here on this line, there isn't much hope for the volatility index until the stock market has had a substantial pullback, and you're not going to get one until earnings season is over. Alright, that does it for me for today. If you guys are interested in this kind of stuff, just go ahead and subscribe to my YouTube channel, as I will have more for you guys in the coming weeks and months ahead. If you guys are interested in the charting software that I use, go ahead and check out the link right below this video. Anyway, that does it for me for today. Take care, guys, and I hope you guys have a great week and a great trading day tomorrow. Take care.